Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar continues the course correction started 3 days ago. From the 6-week highs around 68.85, the market now posts a fresh low this morning of 67.77. Yesterday, the Bureau of Statistics, the ABS, released its unemployment rate, which rose by 5.3%, unrevised from July 2019 figure, that is. The rise in the jobless rate comes despite two rate cuts from the RBA in June and July. The back-to-back cuts have hardly or even changed the significance of the rate, being 5.3%. Although employment surged by 34,700, led entirely by part-time workers. Not quite what the RBA wants to see. Now, from the figures from yesterday, has now increased the chances of a rate cut in October. So no doubt the Aussie will continue its path, especially taking out the level of 68.25 yesterday, has now opened the way towards 67.60, which is nearly just a stone throw away. Could see further weakness down to 66.80.90, where these three stabs did find initial bullish traction. But from the MACD and the RSI, continues to support the bear case. Little to report in the euro, as it still remains capped at 111 figure 15, and resistance also seen at 110.60. I do anticipate, as this pattern continues and fails the upside challenges, that we are looking down towards the region of 109.35 to 50 as a target. Since dollar yen rejected the level of 108.40, with 46 being the high, the bears have continued to pressure the downside, but we've not quite broken the level of 80 yet. A break of 107.80 should give further exposure to the downside and look towards 107.45 to 106.70 as a target. As widely expected, the Bank of England left its base rate unchanged at 0.75%, with all 9 members of the Bank of England's Monetary Policy Committee voted to keep rates on hold at that level, and reiterated that warnings that the no-Brexit deal risked hurting sterling and damaging growth. From a technical point, this ascending triangle was nearly completed, and a break is imminent, that the fact we could see beyond 125.20 to look towards 126.60.80 as a target. Gold still trading sideways, and at the moment, for the last 8 trading days that is, the market has respected the level of 1,478.84. Seen as a key level, and as long as it's intact, I still keep my view up to 12, and then on towards 1,520 to 24. Wrapping up with oil, the market is still uncertain due to the fact is that the Saudi Arabian and also the US officials have accused Iran of being responsible for last weekend's drone attacks on the oil complex in Saudi Arabia. Still, at present, since this breakaway gap from $54 up to $62 and a 15% rally does still give uncertainty that we could fill the gap, but until we see the support broken around 54.40.60, which is a long way away, still can see a challenge back up to the top side of $62 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy today and a great start to the new weekend.